morning, everybody. Hope you are all fine and safe. Now, today, let us go to another standard AS2. What is that? Everybody have to observe AS2. Once clearly observe the name of the standard. Always the name of the standard, very, very important. So, make it clear. So, what is the name of the standard? Everybody has to observe. Valuation of inventories. What is the name of the standard? It's not just inventories. It's not just inventories. It is what? Valuation of inventories. Okay, sir, understood. Valuation. The name itself makes it very, very clear that this standard is going to talk about only valuation. Make this very, very clear. The name of the standard itself makes it clear that our main concentration is going to be with respect to valuation. Our concentration is not on accounting treatment. See, inventory, if you purchase inventory, record in trading account as purchases or sales, all these things, when you have sold it is sales, all these things we are not going to discuss. It is for what value you need to record in your books of accounts. Now make it very, very clear. Our main intention in this standard, our main purpose in this standard is to know the valuation principle, at which value we need to record the inventory. So hope it is clear, right? Now before proceeding to understand at which value we should record inventory, let us first try to understand. So what is the definition of inventory, or what is the meaning of inventory? Everybody, first let us try to understand what is the meaning of inventory. Now observe carefully. I would like to divide these inventories into three types. I think you already know in your costing also. Now just I'll write three statements. Tell me, apply when you apply your costing, which of these three you can apply. Now let me write down first, then I'll explain you. Inventories are the assets. What is the definition of inventory? Inventory are the assets. Inventories are the assets held for either of these purposes. There might be three purposes. What are the three purposes? Held for sale in the ordinary course of business. It might be held for sale in the ordinary course of business, or held in the process of production. Something I've written. It is held in the process of production, or held for consumption in the production. Held for consumption in the production. Like that, three types of inventories are possible. Now I'll just give you 30 seconds time. Think over and compare with which type of inventory you can make it match with your costing. Think over in costing. I think three types of inventories you would like to have: raw material, work in progress, finished good. Now quickly apply the definition and tell me what is raw material and what is work in progress and what is finished good. Just think over. Everybody, just observe. 30 seconds time. In this definition, what you can apply. So I think if you observe for sale, definitely you might have got it as finished good, accepted. Now it is in the process of production. You have got it as work in progress, accepted. First one is finished good. Second one is work in progress. Now the third one, for consumption, we can write it as raw material. For consumption in the production process, we would like to call it as raw material. These three are inventory. These three are inventory. Now let me ask you an example and you tell me whether it is an inventory or a fixed asset. What is that, sir? Let us say there is a real estate company. What is that? There is a real estate company. It is purchasing a land. Now tell me, is it an inventory for that or not? Sir, it is for sale in the ordinary course of business only. A land is there, but it is for sale in the ordinary course of business. Hence, it is an inventory. Accepted. Let us say a stockbroker is there. He's purchasing shares. Now tell me, shares are there with him. Now is it inventory or investment? Right. I think it's inventory only, sir. Why? Once again, the reason is same. It is also held for sale in the ordinary course of business. So apply the definition properly. It's just the normal wordings. You have to apply the purpose, whether it is held for sale or not. Next one, in the process of production. The last one, for consumption in the production process. process. Now I'll give you one more example. Think over and tell me whether it is an inventory or not. What is that? Let us say, I think in costing you might have seen something like grease, oil. Just wait. Something like you might have seen grease, then oil. Just wait, everybody. Grease, oil, then lubricants and all. Now I think in costing you might have all seen all these words. Now tell me, grease, oil and lubricants, are these inventory or not? Think over carefully and answer. Grease, oil, lubricants. Now if they are inventory, as per which condition? Now three conditions are there. If they satisfy either of these three, we would like to call it as inventory. Now think over and tell me. Sir, it will satisfy the third condition. Am I right or not? Yes, yes, yes. It is going to be consumed in the production process. It is not held for sale. We are not going to do further process and make it ready for sale. It is not any work in progress. It is going to be consumed in the production process. So in the third category, along with the raw material, we can include even this one also. What is that? In simple, I would like to call formally as consumables, or any maintenance supplies and any loose tools. Generally, I would like to call it as consumables. Not just raw materials, any consumables are also included in the third condition. So hope you are all understanding. So this is the definition of inventory. So yes sir, yes sir, we have understood. Now, I would like to ask another question. Have you ever heard something about spare parts? ఎప్పుడన్నా విన్నారా? Spare parts అని ఎప్పుడన్నా విన్నారా? Just observe everybody. I'm asking you something about spare parts. Have you ever heard about spare parts? Yes sir, yes sir, in costing only. What do you mean by a spare part? Spare part ante enti? Everybody, what do you mean by something called as spare part? Okay sir, when you say spare part na, it means whenever there is any repair, let us say big plant and machinery is there, అందులో ఒక చిన్న part repair వచ్చింది. Now we cannot stop the production process just because one part is required. So thereby we would like to replace it with another part. We'll always maintain some spare parts. Am I right or not? Exactly, exactly. We'll always maintain that spare parts. Now the point is, are those spare parts considered as an inventory? Everybody has to think over. Are those spare parts considered as an inventory? Will we call that as an inventory or not? The answer is depends on the situation. Depends on the situation. Now, if they satisfy the definition of PPE, what is that? If it satisfy the definition of PPE, what is PPE? Property, plant and equipment. Nothing but fixed asset. If its use is for more than 12 months, generally it goes under a category of fixed asset. No sir, its use is something less than 12 months only. చిన్న పార్టే వెంటనే కన్సంప్షన్ కూడా అయిపోతుంది, ఎక్కువ కాలం ఏమి రాదు, ఎక్కువ టైం పీరియడ్ ఏమి యూస్ చేయము. Then you can consider it as an inventory. Now make it very very clear. Not just spare part. I would like to give few more aspects also. Everybody, not just spare parts. I would like to give few more aspects. Just wait. Not just, actually this is the definition. Not just spare part. I would like to give few more parts also. What is that, sir? First, anyway, spare part. Then next, standby equipment. What is that? Standby equipment. Now third one, servicing equipment. For all these three, the principle is going to be the same. What is that, sir? What is that principle? Now the principle is very simple, everybody. The principle is very simple. If the PPE definition is satisfied, if they satisfy the definition of PPE, AS10 will be applicable for them. What is applicable? AS10. No sir, if PPE definition is not satisfied, then we'll apply AS2. Then we'll apply AS2. So hope you are all understanding. Hope you are all understanding. Now sir, you have understood what is spare part. Now what do you mean by standby equipment, service equipment? Standby equipment means, let us say big factory is there, 100 machineries are there. Now tell me, do you think all the machineries will work properly at all the time? Not possible, not possible. There might be some big repairs suddenly. Now you cannot stop the production process. No. So always what you will do is, you will maintain one or two machineries in excess, so that if suddenly something happens to any machinery, they can replace it. Suddenly any fire occurred, then also. So for any extra spare purpose, here the entire equipment only is being used. That is called standby equipment. If any small part is kept as an extra, that is spare part. No sir, entire equipment is kept, that is standby equipment. So the last one is servicing equipment. This is nothing but those equipment which can be used to do repairs. See, generally, small repairs are there. Now, can we call every day a person who could do repairs and all? Prati roju repair pills చేయించుకోవడం అవసరమా? లేదు. I think we can buy some small repair equipments, servicing equipments with which we can do it. We did not wait for another person to come and repair. So those are servicing equipments. In all the three cases, generally these three satisfy the definition of PPE and they are considered under AS10 only, generally. But if at all they don't satisfy the definition of PPE, then we will consider them as per AS2. So that is the point. So hope everybody have understood the definition of inventory. So this is what the definition of inventory. So once let me quickly revise. Everybody just need to observe. I'll just quickly revise what is the definition of inventory I've discussed so far. What is that? Inventories are the assets held for sale in the ordinary course of business or for production process, in the process of production, or held for consumption. Consumption, it includes both raw materials as well as any consumables. But these spare parts, standby equipments and servicing equipments, these are considered only if they do not satisfy the definition of PPE, but generally they satisfy, and hence generally they are considered as per AS 10. So that is what the definition of inventory. Now let me proceed further. In this standard, it is clearly said that though we consider something as an inventory, sometimes that valuation principle may not be given in the standard. Make it very clear. కొన్ని ఇన్వెంటరీస్ మనం అనుకున్నాము, కానీ అవి ఇన్వెంటరీస్ అయినా కూడా though they are inventories, how to value such inventories are not given in the standard. The name of the standard is clear, valuation of inventories. It cannot give valuation principle for all types of inventories. So thereby standard said clearly some inventories for which generally we will not apply AS2. Valuation principle of AS2 is not applicable. So what are such exclusions of AS2? So I would like to show here. Scope. This standard is not applicable for the following inventories. So what are such inventories? So first one, work in progress arising from construction contracts. What is that? Work in progress arising from construction contracts. Maybe in AS7 you have seen something called as construction contract. Generally, construction contract, it takes for more than 1 year. Hello. Generally, construction contract, it usually takes more than 1 year, and as a result the cost incurred during the year you will recognize it as WIP, but still the valuation of such is not covered here. It is mentioned in AS7 separately. Picture కాబట్టి ఇక్కడ మళ్ళీ మాట్లాడేదే లేదు. Now similarly, work in progress of any other service provider, this is anyway service only. Now here also any other service provider, if any service provider is there, is providing any service, it is in the work in progress stage. Now how to record that, how to value that? Standard has nowhere given. Example, let me give an example. Let us say you are doing an audit service, you are providing an audit service, internal audit. Now let us say you started in the month of Feb, you have conducted in the Feb, March and April, and in the May month you have given the report. Now tell me, 2 months are done in the year end. For this year end, 2 months are completed. Now shall we record the cost for these 2 months as WIP? Purely matters, because what happens now, if you observe as per AS9, this service is considered to be an indivisible service. Completed contract method will apply. What is that? Completed contract method. Because in an auditing service, the main point is giving report. Even if you don't audit, even if you do not go to the enterprise really and check, but still if you give audit report, it is okay for them. And if you check very well, and if you don't give audit report, they don't say it's okay. Definitely they'll be hard. They'll say you have to give audit report. Now understand, in the case of providing service, now sometimes we cannot in a pakka way we cannot divide. In auditing also there are different activities performed. Now you cannot particularly decide which activities will have more importance and all. So thereby generally a standard has said clearly, service providers, whatever work in progress is there, it has to be done as per general practice only, will not apply these things. So hope it is clear. Next one, third one, if an entity holds shares, debentures and other financial instruments as stock in trade, this standard is not applicable. What they are telling, sir, I'll tell you now. I think you know AS13. In AS13 they have said clearly that If you hold anything as a stock in trade, if you hold anything as a stock in trade, మీరు stock in trade లాగే ఏదైనా హోల్డ్ చేస్తే it is not an investment. Like that they have clearly given. Hello everybody, in AS 13 they have clearly mentioned that if you hold anything as a stock in trade, మీరు ఏదైనా stock in trade లాగా హోల్డ్ చేస్తే it is not an investment. It is not an investment. But have a point, sir. అంటే అది ఏమవుతుంది, ఇన్వెంటరీ అవ్వాలి కదా సార్, అంటే ఇన్వెంటరీస్ లో డీల్ చేస్తాము. బట్ మేక్ ఇట్ వెరీ వెరీ క్లియర్. AS2 says that it is an inventory only, it's a stock in trade only, but I don't know how to value. Hello, AS2 clearly says that it's an inventory, but I don't know how to value. It's a stock in trade, I accept it belongs to my family only, but I don't know how to do. AS13 says it's not an investment at all because it's a stock in trade, accepted. Then we should follow AS2. But AS2 says it's an inventory only, but I don't know how to value. The valuation principle is not given in me. Now what to do? Then there came up the ICI with a guidance. Hello, ICI came up with a guidance telling that for the purpose of valuation, treat them as current investments as given in AS13. For the purpose of valuation, treat them as current investments. So thereby we will not apply AS2 at all. We'll apply AS13 if any shares, debentures or other financial instruments are held as stock in trade, though they are not investments. Investments kavu, but for the purpose of valuation, because of the ICA guidance, we follow like that. So hope it is clear. Now the last one, inventories of livestock, agricultural and forest produce, mineral ores and gases. What is this? I'll tell you. But before proceeding, make it very very clear. Here it is not given properly. It's actually producer's stock. Producer's stock of, or producer's inventories of livestock, agricultural and forest produce. What is this? What this standard or what this exclusion is dealing with? Now make it very very clear. I think a farmer can be called as a producer. Am I right or not? Now he is growing some agricultural produce, ఏదో ఒక wheat, paddy, something. He is just growing it. పంట పండిస్తున్నాడు కదా, we can call him as a producer. Now he develops a lot. చాలా టైం పడుతుంది ఒక పంట పండాలంటే. So thereby he is a producer. Now similarly, let us say a poultry farm is there. Now immediately you can use that hen whatever for your purpose. No. You have to grow that. కొంత పీరియడ్ దాన్ని గ్రో చేయాలి. Now the owner, he is a producer. Now the point is, in the case of such producers, may it be agricultural or forest or any livestock, all these things, now can we apply AS2? Think properly. Is it genuine to apply AS2? నిజంగా బాగుంటుందా? Now I feel that for them cost na irrelevant. Generally whatever cost they incur, it doesn't matter. Ultimately at how much value they are able to sell in the market, that is only important. Something else. It is not what is the cost for them. The main point is for how much value they are going to sell in the market. That is important. So generally these things, producers inventories of livestock, agricultural and forest products, these are valued in accordance with NRV, that too as per general practices and not as per AS2. Make it very very clear. When I say producer, it is producer only, not any wholesaler or retailer. If I say wholesaler or retailer, now he will become a trader. Make it very very clear. Whenever I say this, if I say wholesaler or retailer, now he will become a trader. If he is a trader, now this standard is applicable. Make it very very clear. What we are telling is, for producer only exclusion is applicable. For trader this standard is applicable. For producer only exclusion is there. That means AS is not applicable. So hope everybody have understood. So these are all the exclusions given in the standard. Though they are inventory, but still their valuation principle is not given in the standard. So far what we have discussed, we have seen, everybody has to observe, we have seen the definition of inventory and then the exclusions of the inventory definition. Now let me proceed further. Inventory, I've said you in this chapter, mainly what we are going to deal with is valuation. What is that? Valuation. So what is the valuation principle of inventory? You tell me. మీకు బాగా తెలుసు జనరల్, చిన్నప్పటి నుంచి అంటే మేబీ అకౌంట్స్ లో ఫస్ట్ నుంచి నేర్చుకుంటున్నాను. What is that? Inventories are to be valued at cost or NRV whichever is lower. Am I right or not? I think you would value inventor in this only. What is that? Cost or NRV, whichever is lower. మనకి ఎప్పటి నుంచో అప్లై చేస్తూనే ఉంటాం. Now, but we should know clearly, sir, what do you mean by that? Cost and inventory. Cost ante enti, inventory ante enti. A clarity kavali. Now, when I say cost, now it comprises three components. Everybody has to observe. When I say cost, it comprises three components. Cost of purchase, now cost of conversion, then the other costs incurred. What is that? What is that? Cost of purchase, cost of conversion, the other cost incurred. Okay. For your convenience, I would like to write it in detail. కొంచెం detail గా రాస్తాను. Purchase cost na, it is simply material price. What I would like to call it as purchase cost, I would like to call it as material. And when it says to conversion, I would like to divide it into labor and overheads. What is that? Labor and overheads. And I'll once again subdivide overheads into, I think you already know, overheads are of two types. One is fixed overheads, another one is variable overheads. So variable overheads, fixed overheads, and these are the other costs. Other costs means there are some things which are required to make it ready for sale. Let us say packaging expenses. I'm just giving an example. Very good example is packaging. When you say packaging and all, they are required to get it ready for sale. So understand. So cost na, whenever we say cost, it comprises of three parts. What are that? Cost of purchase, cost of conversion, and the other costs. What do you mean by cost of purchase? It's simply materials cost. What do you mean by cost of conversion? A raw material to get converted into finished good, it has to go to some conversion process. So in that case, they will incur some labor, they'll incur some overheads. These are called as cost of conversion. So observe that labor expenses or overheads. Overheads once again will divide into variable overheads and fixed overheads. Make it very, very clear. Overheads once again will divide it into variable overheads and fixed overheads. Then the last one is other costs. Like that we will divide the costs. Now let me start with one by one. ఒక్కొక్కటి అనలైజ్ చేద్దాము క్లియర్ గా. First, let me start with this cost of purchase. Everybody has to observe. First, let me start with cost of purchase or material cost. Simple. It is very, very simple. Whenever I say cost of purchase, I would like to include these items. What are that, sir? Just observe carefully. Here a table is there for cost of purchase, for calculation of cost of purchase. What is that, sir? Now, whatever initial purchase price you are having, that is always a part of cost of purchase only. Accepted, sir. Now, any non-refundable duties and taxes. Make it very, very clear. Non-refundable. That means if it is refundable, it is not a part of the cost of this. Let us say any GST is there, you are paying any GST. I think you will be getting input tax credit. Then you should not include. If you are not getting input tax credit, then you may include. Similarly, customs duty. Now tell me, for import or export, will you get any refund for that? No. Then it can be added. There are similarly various local taxes also on which GST is not applicable, just like octroi and all. Now make it very, very clear. If it is refundable, it should not be considered. If it is non-refundable, it can be considered. Then any freight charges, you can add it, and any insurance cost, transportation insurance, if it is inward transportation. If you see, understand, whenever insurance cost is there, if it is for transportation, మనం ట్రాన్స్పోర్ట్ చేసుకోవడం మధ్యలో ఇన్సూరెన్స్ చేస్తాం, బికాస్ సడన్లీ ఏదో ఒకటి జరగచ్చు ట్రాన్స్పోర్టేషన్, అందుకని ఇన్సూరెన్స్ చేస్తాము. దాట్ ఇన్సూరెన్స్ కాస్ట్ ఆల్సో మేకింగ్ ఇట్ నెసెసరీ ఫర్ బ్రింగింగ్ ఓన్లీ. సో అది కూడా ప్రాపర్ గా రావడానికి, మనం పర్చేస్ చేయడానికి మెటీరియల్స్ మన దగ్గరికి రావడానికే కాబట్టి దట్ ఈస్ ఆల్సో డైరెక్ట్లీ అట్రిబ్యూటబుల్. యూ కెన్ కన్సిడర్. Then any other cost, we can attribute various costs. Any other cost directly related to the acquisition and bringing it to the warehouse. All these things we can consider. Now what you will reduce is trade discount or quantity discount, both are same, or any duty drawbacks, just like refund of taxes and all. Required include chest. Anyway, not required. So these things to be reduced always, not to be considered. So hope it is clear. This is what about cost of purchase, right? Now we have completed cost of purchase. Now let us proceed to conversion cost. What is that? Everybody has to observe. So far we have completed the cost of purchase. Now let us move to conversion cost. I have discussed with you first one, the cost of purchase. Now let us move to conversion cost. Sir, what is this conversion cost, sir? Wait. Let me start. I'll start discussing conversion cost. No, I have said you already. Conversion cost, it generally comprises two parts. One is labor and another one is overheads. It's not just overheads. Make it very clear. It is labor and overheads. I would like to divide labor and overheads. The cost incurred to convert the raw material into finished good. So it is just labor and overheads. Now, whenever I say some expenses like material, labor, variable overheads, fixed overheads. Now, if you observe carefully, these first three have one different characteristic when compared to the last one. Can you tell me what is that? Materials, labor, variable overheads. These three have one characteristic, and whereas fixed overheads has got another characteristic. Can you tell me what that one significant difference? Can you observe that significant difference? So if you observe carefully, these always, whatever you incur, that will only be recorded. మీరు ఏదైతే యాక్చువల్గా ఇంకర్ అవుతారో యాక్చువల్స్ ఏవైతే ఉంటాయో అవి రాసేస్తారు. బట్ ఇన్ ద కేస్ ఆఫ్ ఫిక్స్డ్ ఓవర్ హెడ్స్, what will happen now, as it is not per unit, it is to be allocated. Whatever total cost you have incurred, make it very clear, whatever total cost you have incurred, based on the totals you need to allocate that. Based on the totals you need to allocate. So there is some minute difference between all other costs and fixed overheads. In all other, per unit only generally you will incur material price per unit, labor per hour, like that. Per unit we can understand, per hour, variable overheads, like that we can understand all those other things in per unit basis, except fixed overheads where allocation is required. What is required? Everybody has to observe. In the case of fixed overheads, the allocation is required. Now the point is how to do the allocation in the case of fixed overheads. That also we are going to learn. Now observe carefully. Variable overheads, it is based on actual capacity utilization that we will do. Whenever we take for fixed overheads, whenever we take fixed overheads, now how do we allocate, sir? Now observe carefully. There is some principle given here. We'll understand that. But before that, let me take a small example. You'll better understand. So what is this allocation? How to allocate? ఎలా allocate చేయాలని ఒక మంచి ఎగ్జాంపుల్ తీసుకుందాము. Now let me take an example. Everybody has to observe, right? Let us say totally you have incurred some fixed cost of 2 lakhs, fixed overheads of 2 lakhs. Everybody make this very clear. Let us say you have incurred a fixed overheads of 2 lakhs. Now I think in costing you know that generally you allocate it based on what? Normal production, right? Normal production or normal capacity, right? I would like to write, let us say normal production is 10,000, and whereas actual production, another one. Generally these things will be that normal production, actual production. Now let me take an example. Normal production is 10,000 units, actual production is also 10,000 units. Now you tell me what is the cost per unit. Everybody has to observe what is the cost per unit in this case. Everybody has to observe what is the cost per unit in this case. Sir, very simple, sir. Normal production, actual production, both are same. We can say that it is 2 lakhs divided by 10,000. So which is how much? 20 rupees per unit. It is the cost with respect to fixed overheads. Accepted. Now allocation are very simple. Now let me change the number. Just observe carefully. Let me change the number. Let us say it is not 10,000, it is 8,000. Everybody has to observe. Let us say actual production is 8,000. Normal production 10,000 only. What do you mean by normal production? If you are not having any abnormal situations and normal ga eppudlane production process jarigite meeku enta production output laga vastundi. That is what we have to observe. So now tell me, if the actual production is 8,000, normal production is 10,000. Now how do you allocate? So I think once again you will give an answer that, sir, we have learned in our costing generally actual production will not consider, will consider only normal production. Hence once again our answer is 20 per unit only. I think you are observing, you are thinking in the same way. The cost is 20 per unit. Okay, still I accept. Now let me take another situation. Let us say actual production is 12,000 units. Can you give me answer now? Let us say actual production is 12,000 units. Now think over what is the, hello everybody, now think over what is the cost per unit. Let us say the actual production is 12,000 units and the normal production is 10,000 units. Think over what is the cost per unit. Now, sir, actual production are not relevant. What is relevant is normal production. That means you will once again say that it is 20. Generally, you will feel the same way. Am I right or not? Yes. Okay. Now, if you feel that it is 20, I'll just ask you to do a small exercise. Tell me, and per unit ఎంత allocate చేయాలి? 20 allocate చేయాలి. Super. Okay, I understood. Now, can you allocate this? ఈ 12,000 units కి ఒక్కసారి allocate చేస్తారా? 20 ఏమవుతుందో చెప్తారా? ఎంత అవుతుందో? 12,000 into 20. If you apply, what is the cost? 2,40,000. But what is the actual cost? 2,00,000 only. Okay, something different. Observe carefully. మీరేమన్నారు? Sir, normal production ప్రకారం we have to allocate as per normal. Hence you have said the cost per unit is 20. Okay, accepted. That means totally how much cost you will record? 12,000 into 20, 2,40,000. Cost incurred only 2 lakhs. You will incur something 2,40,000. Is this correct? No. Something wrong is happening. Something wrong is happening. Everybody observe here. Here, something wrong is happening. It is not to be done in that way. You have to take the actual production. Like this, very clear. Whenever actual production it is greater than normal production, what will happen? You have to do the valuation. You have to allocate it based on the actual and not normal. Why, sir? This is simple reason. Now what is happening here? ఇక్కడ per unit normal ప్రకారం తీసుకుంటే కాస్ట్ ఇంక్రీజ్ అయిపోతుంది. So you can never do like that. You can never record some cost which is not actually incurred. Incur అవ్వని కాస్ట్ రాయకూడదు కదా. Hope you are getting. సార్ ఇందాకది కూడా ఒకసారి మళ్ళీ రీవిజిట్ చేద్దాం సార్. 8,000. Now let us apply. అక్కడ per unit 20 తీసుకున్నారు అనుకోండి. 8,000 into 20. Sir, how much cost we are recording? 1,60,000. Sir, then this is also wrong only, no sir. 1,60,000 ఎలా రైట్ అవుతుంది? Understand carefully. When I say 1,60,000, now this is to be considered as product cost. In costing, you might know two costs. One is something called as product cost and another one is period cost. If it is allocated to any product, we would like to call it as product cost. If it is not allocated to any product, we just simply charge to P&L, which we would like to call as period cost. Now understand carefully, when the actual production is 8,000, now we'll apply in the normal way. At 8,000 into 20, if we apply 1,60,000, okay, but still the balance will be adjusted as product cost. Hence, అందుకని ఆ ప్రాబ్లం అనేది రాదు. ఎలాగైనా కాస్ట్ రికార్డ్ అవుతుంది. అందుకని సింపుల్గా ఏం చెప్తామంటే అలా ఎలకేషన్ ఏమొద్దు. ఓకే ఎనీవే కాస్ట్ విల్ బి రికార్డెడ్. నౌ యూ జస్ట్ సింప్లీ you just consider the normal production rate. Whatever normal production rate that you need to consider. అంటే అక్కడ 10,000 కన్సిడర్ చేసి 20 rupees per unit తీసుకుంటే చాలు. You need not take 25 divided by 8,025. Like that not required. Just take it based on the normal production. Sir, my exact cost to max out like that. Don't worry. 8,000 into 20 booked as the product cost. So something more, whatever left na, we'll book as period cost. Hope you have all understood. See, if actual production, normal production, both are same, then nothing issue at all. Total fixed overheads divided by number of units will get the cost per unit. If the actual production, if it is less than the normal production, then also not a issue. Normal production prakaram allocate cheyandi. If the actual production is more, then if you follow the normal production as a basis, then the cost recorded will be more. Hence follow the actual cost only. Actual production only. Of course, this can be interpreted in another way also, which you have learned in your costing. Already మీరు costing లో మీరు నేర్చుకొని ఉంటారు. You might have learned in another way, which we will just observe here. What is that another way na you have learned in your costing? మీ costing లో ఇంకొక వేలో నేర్చుకొని ఉంటారు. ఎలా నేర్చుకొని ఉంటాం సార్? Now, in your costing, they might have said you like this. See, if you consider here in the second case, whatever 8,000 is there, whatever 8,000 is there, or second case na 8,000, third case na 12,000. The standard says very clearly that actuals has to be considered in one case, normal has to be considered as one case. I've given you the logic also in costing. కాస్టింగ్ లో మీకు ఎలా చెప్పారు ఆ పాయింట్ గురించి మాట్లాడదాము. దానికి ఒకసారి ఐ థింక్ రాదర్ దెన్ టేకింగ్ దిస్ ఎగ్జాంపుల్ కింద ఆల్రెడీ దానికి ఎక్స్ప్లెనేషన్ ఇచ్చారు. విల్ లుక్ ఎట్ అనదర్ ఎగ్జాంపుల్ సో దట్ విల్ హ్యావ్ క్లారిటీ ఆల్సో. Right, just observe carefully. This is yet another example. I think here actual or once again fixed overheads is same. Just observe what is that reason. Now observe carefully. Whenever actual is less than normal, what will happen is, now అప్పుడు actual కి allocation ఎక్కువైపోతుందా లేదా, అంటే కాస్ట్ పర్ యూనిట్ పెరిగిపోతుందా లేదా, అంటే ఇందాక ఎగ్జాంపుల్ లో కూడా ఇఫ్ యూ టేక్ 8,000 ఒకవేళ తీసుకున్నారు అనుకోండి, ఇట్ విల్ బికమ్ 25, అంటే ఆటోమేటిక్ గా కాస్ట్ పర్ యూనిట్ పెరుగుతుంది కదా. నా వాట్ దే సే is whenever actual production is less than normal production, it is due to inefficiency, it may be due to idle time. Any abnormal loss or inefficiency cannot be considered a reason to increase the cost of the inventory. Understand, cost of the inventory can never be increased, because of the inefficiency or the abnormal loss. అందువల్ల అక్కడ మీ కాస్టింగ్ లో ఈ ఎక్స్ప్లెనేషన్ ఇచ్చి ఉంటారు. జనరల్లీ what they say is it has to be considered on the normal, but in your costing another way also they might have said if it is to some extent only, it has to be applicable to some extent. When it is crossing 100%, you have to go for actuals apply చేయాలని 100% లాగా చెప్పుంటారు. So make it very clear. Now both the ways are there. Now let me consolidate. Now what I just want to conclude, only one thing I just want to conclude. Whenever you look after any allocation of fixed overheads, everybody has to observe, whenever you look after any allocation of fixed overheads, the point is very simple. If the actual capacity is greater than the normal capacity, then or greater than or see, observe carefully, it is greater than, then you will apply actual capacity. No sir, actual capacity less than or equal to, it doesn't matter, you will consider the normal capacity. So that is what the allocation of fixed overheads. Hope everybody have understood. In cost, how many components are there? 3 components. One is cost of purchase, another one is conversion cost. When I say conversion cost, it is labor and overheads na both variable as well as fixed. Now we are talking about fixed overheads. Now the last one is other cost. Okay. Okay, right. Now let us continue with other costs. I've said you totally 3 types of costs will be the cost of purchase, cost of conversion, and then other costs. Now let me go to the other costs. So what are these other costs, sir? Something you are telling other costs. What are these other costs? Understand, even after incurring material, even after incurring the labor and overhead, still there might be some costs which are necessary to get it ready for sale. Something I've said. What I've said? Even after incurring material, labor and overhead, still there may be some costs which are necessary to get it ready for sale. Sir, give us one example. Okay, I'll just give you one example. Let us say something like packaging cost. What is that? Everybody out to observe. Packaging cost. Now tell me, is it required to get it ready for sale or not? After it becoming a finished good, once it has become a finished good, but still it requires packaging to get it ready for sale. Am I right or not? Now similarly, I'll just give you another example. Quality control cost. Now observe carefully. Even after becoming the finished good, it has become a finished good. Even after becoming the finished good, now without checking the quality of a product, can we sell it? No, it's not possible. Are you all understanding the point? Even after becoming a finished good, there are some costs which are necessary, and even R&D costs which are incurred. Now all these things generally you will get under one group in your costing. If you observe, under your costing you will get all these expense under one group, right? The next, something called as administration overheads are there. What is that? Everybody has to think of something called as administration overheads. Sir, now there arises a point as to, sir, whether administration overheads are they considered or not? Are they considered under the other costs or not? I'll just give you clarity. See, when I say admin expenses, everybody have to observe. Whenever I say admin expenses, you make it very, very clear. Administration expenses can occur, make it very, very clear. Either at the factory level, make it very clear. It can occur either at the factory level or it can occur in head office. Are you all understanding? It can occur either at the factory level or any general administration office or head office. Because in some places there will not be any business, but in some place factory. Now, if you observe here, if you take any rent here, suppose there is a rent. Now here also there is a rent. So two expenses are there. In head office you are having rental expense. In factory also you are having rental expense. Now in factory, let us say you are manufacturing some three products. Hello, you are manufacturing some three products in the factory, namely X, Y, Z. Now each building has three floors, each floor one product. Now you can easily allocate the rent. But when it comes to head office rent, is it possible for allocation? Everybody think over. Is it possible for allocation? Not at all, because they were in nowhere related to the production. Hope you are all getting. They were in nowhere related to the production. So thereby make it very, very clear. Administration expenses shall be considered under other costs or not. If they are directly related for your production, in other words, they are factory related, that we have already considered. Hope you are all getting. If they are production related, directly related, na, we will consider. Otherwise, these general administration overheads we will not consider. So hope it is clear. So generally, any administration overheads na, we will not consider. But here, if they are related to the production activities, like that they have mentioned, if at all it is not covered under factory overheads, here it will be covered. But generally, no. General administration overheads should not be included. So hope it is clear to you all. Right. Now at the same time, in the exclusions, it will be clearly mentioned that any general administration overheads should not be considered like that. So hope and now it is clear to you all. Now thereby we are discussing that in costs totally how many types of costs are there? Three types. One is purchase cost, everybody. Another one is conversion cost. Now make it very, very clear. One is purchase cost, another one is conversion cost. Now the third one we have seen is other costs. What is that? Other costs. Like the three costs are there. Now there are some exclusions also in standard itself. Clearly they have given some exclusions. That means they are generally not considered as the cost. Now what are such exclusions? What are such exclusions? Now whatever we have seen initially, that is nothing but general administration expenses. Okay, that is straight away not considered. Then next, what not considered, sir? I'll tell you. Maybe I think in your costing, in your materials chapter, I think you might have come across something called carrying costs. Am I right or not? You might have come across something called carrying costs. Now what do you mean by carrying costs? I think it comprises both storage costs. What is that? Everybody have to observe. It comprises both storage costs as well as interest cost. Am I right or not? Everybody have to observe. It comprises both storage costs as well as interest cost. So these are some costs which are required after the product is ready also. Now understand carefully, this storage cost or this interest cost, are they required to get it ready for sale? Everybody think over. These costs, are they required to get it ready for sale? Now the answer is no. Hello? These costs are not required to get it ready for sale because already they are ready for sale. Now they are unable to find the buyer. They are unable to find the buyer. In the in between period, they need to store. They need to, the storage cost will be there. There will be some interest cost. Now these things will not be considered because once the product is ready for sale, that's all. All the costs incurred till that date only will be considered. These things will not be considered. But I make it very, very clear. If it is interest, what is that? If it is interest, there is a little chance that it can be considered because of AS 16. What I have said? Because of AS 16. Now what AS 16 says? AS 16 says that borrowing costs relating to a qualifying asset shall be capitalized. Something I have said. What I have said? Borrowing costs relating to a qualifying asset shall be capitalized. Now, when I say qualifying asset, it doesn't mean a current asset or a fixed asset. Any asset, it doesn't matter. It doesn't matter only whether current or fixed. It applies for all the assets. So when I say like that, now inventory, if the inventory takes substantial period of time, then it will also become a qualifying asset. Let us take, you are a builder, you are a builder. Now for constructing your building, you will take substantial time or not. You are a builder, you you construct the buildings and then sell it. Now for constructing the building, will it take substantial time for you or not? Undoubtedly yes. Then let us say you are a manufacturer of plant and machinery. You are manufacturing many plant and machinery. Now big plant and machinery will definitely take some time. It also might be a qualifying asset for you. Now you are a automobile company. Now you manufacture big cars. Now it also may take some substantial time. So hope everybody are understanding. If the inventory takes substantial period of time and if it satisfies the definition of qualifying asset, then interest can be considered. In that case, interest can be considered, but otherwise, generally, no. Hope you are all getting. So this is the point. Just observe here. So interest and financial charges in general, no. But if it satisfies the definition of qualifying asset, then it will be yes. That is the point. The next, selling and distribution expenses. Once again, the same reason comes here. Hello. Whenever we say selling and distribution expenses, now tell me, are they necessary for getting it ready for sale? Hello. You need to observe. Are these costs necessary for getting it ready for sale? No, no, no. Already the product is ready for sale. These are some costs to sell. That's all. These are selling expenses. What we'll say, everybody have to observe. These are what? Selling expenses. Hello. Make it very, very clear. These are selling expenses and these are not to be considered in the cost. These are not to be considered in the cost of a product. Now make it very, very clear. These are not to be considered in the cost of a product. Sir, then where it will be considered? I'll just tell you. Just wait. It is not considered in the cost. I have understood, sir. But I think what is the valuation principle for our inventory? Cost or NRV, whichever is lower. Am I right or not? This is the valuation principle. When I say NRV, what does that mean? That is net realizable value. Am I right or not? It is what? Net realizable value. When I say net realizable value, it is what? Selling price minus if there are any selling expenses. Now make it very, very clear. If there are any selling expenses that you are going to reduce, that means when we say net realizable value, it is after selling expenses. So selling expenses not considered as the cost of the product, but it is reduced from the selling price to derive the NRV. Sorry, that is the point. So hope everybody have understood. So that's all. Now let us proceed further. Now thereby I think now you might have understood even this storage cost, general administration, selling and distribution, everything, all these four. The first one, something called as abnormal loss is there. What is that? Abnormal loss. Now let us discuss about this one also. What is that, sir? Abnormal loss. Now what is this abnormal loss? I think you might have already seen this, but in your costing only materials number of times you might have learned something like normal loss and abnormal loss. What is that? Something like normal loss and abnormal loss. Sir, really? Have you learned? Yes, 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 you have learned. Just remember. Now, let me give you an example and you think over it. So then you will understand whether really have you got in your mind or not. Let me give an example. Let us say you are buying some 10,000 units. How many units? You are buying some 10,000 units. Now, let us assume that there is some normal loss. How much, sir? 5%. Let us assume that there is a normal loss of 5%. Accepted, sir. But actually, what you have received is only 9,200 units. How many units you have received? So actually received is 9,200 units. Now, let us say the price paid for this. Now, tell me, because you have received less units, you will pay for less units. Understand? You are purchasing entire 10,000. It is you who have lost that in the transportation or something. It's your responsibility to get it. Are you all understanding? Or let us say you are shifting products from one location to another location. Many times, normal loss may occur as a seller or a buyer. Now, let us say you are a buyer and you are bearing the transportation, everything. Now let us say you are paying for that 10,000 units, let us say rupees 50,000. How much? Let us say rupees 50,000 you are paying. Now observe carefully. Think over and carefully answer what is the normal loss and what is the abnormal loss here. What is the normal loss and what is the abnormal loss. How many units are there? If you observe carefully here, now 10,000 into 5%, normal loss should be 500 units. How many units? Everybody have to observe. Normal loss will be 500 units. Now what is abnormal loss, sir? Abnormal loss, how much, sir? When I say abnormal loss, 10,000 in that 500, if you reduce 9,500, you should have received. But actually you have received only 9,200, thus making some 300 units as an abnormal loss. Now how to account for, sir? How to account for? Now the point is very simple. Normal loss, now it is possible, it should be considered in the cost. Make it very clear. Normal loss, now it is possible, it should be considered in the cost. Whereas abnormal loss, it should not be considered in the cost of a product and it should be charged to the P&L. Make it very clear. Normal loss, it should be charged to the cost of inventory. It should be added to the cost of the inventory, whereas abnormal loss should not be charged. So how to recognize that? Now for that, what we will do is, total cost is 50,000. Now when we are finding cost per unit, now what we will do is, instead of 9,200, we'll write 9,500, so that, understand carefully, now the 50,000 units loss is observed by entire 9,500 units. Hope it is clear. 50,000 units, 50,000 loss is observed by 9,500 units. Normal loss. Now okay. Now that means entire 50,000 cost is spread. Now you'll get some value. Hello. When you do that, you may get some value. Now let us just have a calculation. Let us just have a calculation. Just wait. Right. So what is that? Everybody just observe. We require 50,000 divided by, I think we require 9,500. Now how much it gives? 5.26. 5.26. Now 5.26 is the amount. Now observe carefully. So how much we require? Everybody have to observe. Just wait. 5.26. Now totally 9,500 units na received. Sorry, actually received is 9,200. Abnormal loss na 300. Normal loss 500. Now how do we deal with this? 5.26 into, if you multiply with 9,200, you will get something to be charged to the cost. Now 48,421. This we will charge to the cost of the inventory. Then what about the balance, sir? What about balance, sir? This will be, what is the balance in the 50,000? Everybody just observe. So the whatever balance is there, that will be charged to the P&L as an abnormal loss. That will be charged to P&L as an abnormal loss. So now how do we get that, sir? Now once again I'll show you. 1,000 divided, but this is the abnormal loss, divided by how many units are there? 300. Once again you'll get the same. That is what we are telling. Just make it very clear. Now we have got something 5.26, 9,200 into 5.26. This is charged to the cost of the inventory. Now 300 into 5.26. Now this will be charged to the P&L as an abnormal loss. So this is the procedure. So hope everybody have understood, right? Now let me proceed. So make it very clear. When I say abnormal loss, it also to be excluded from the cost of inventory. Only normal loss is to be considered. Now how do we consider that? Just by in the denominator, when we reduce, you reduce this the normal loss, so that cost will be distributed by the normal loss units. You need not reduce any abnormal loss. So that is the point. Already in detail you might have seen in your costing. So these are all the costs to be excluded. So hope everybody have understood. So with this some basic information related to the costs completed. What is that? Everybody have to observe. Now we have taken three things. What are the three things? One is cost of purchase, another one is conversion cost, another one is other cost. When I say cost of purchase, material cost. When I say conversion cost, labor and overheads. Overheads both variable and fixed. The main point is allocation of fixed overheads. Now how do we allocate? If actual is greater than normal, in that situation alone we'll take actuals. In all other case, normal. That is the point. Now when we go to the last one, what is that? Other cost. There are some costs like packaging cost, quality control cost, R&D, or all these things are considered. So hope you are all understanding. There are some specific costs which are excluded. Now like abnormal loss, or next interest and storage costs. Similarly, general administration expenses like the selling and distribution, all these costs are excluded. So this is the information. So hope it is clear so far. Now Let us deal with some problems at least. Now, so far we have seen some important points. Now, let us see few problems based on this. So, right now, let me start. Let us see few problems based on this. First, few important questions based on this. Right. Just wait. Let us go to few important questions. First one, this allocation. So observe carefully. Fixed overheads allocation. Oh, just we'll deal with few questions and then we'll proceed further. Now look here. For a product, raw material value per unit is 25, direct labor 10 rupees per unit, and fixed overheads is 2 lakhs. Okay, fixed overhead amount not 2 lakhs. Now actual production is 4,000. Normal capacity is 5,000. Now you tell me, how do you allocate? Is it based on 4,000 or 5,000? When actual is less, you will allocate it based on when actual is less, you will allocate based on normal only. That means based on 5,000. The cost per unit to be taken is 40. Now, why they have given two situations, sir? If at all we take the actuals, now what will happen? Cost will increase. That is wrong. Like that explanation is given later. Just observe that. Observe the closing stock valuation. On observation, you can notice that closing stock value based on allocation of normal capacity is low and actual capacity is high. The production is low, maybe because of idle time or due to inefficiency. When there is inefficiency or idle time, the closing stock value is high. When closing stock value is high, automatically profit is increased. It means your inefficiency is becoming an asset to you. Is it correct? No, thereby only will not consider like that. We'll take based on the normals only. Already we have done this discussion. Now let me proceed to another question. Now look at this question. Normal production is, everybody just observe, normal production volume of Rama Limited is 1000 units. How many units? Sorry, 1 lakh units. Now estimated fixed overheads are 5 lakh rupees. 5 lakh rupees. Now calculate the fixed overhead per unit to be observed when the actual production is 1 lakh units, 80,000 and 1 lakh 23 situations are given. Now, if you take the first situation, now both are equal. In that case, it doesn't matter. It is simply 5 rupees per unit. 5 lakh by 1 lakh. It is 5 rupees per unit. Now, let us go to the second case where actual is less, 80,000. In that case, still once again, you will apply based on the normal only. So, that is 5 lakh by 1. That is 5 per unit. In the last situation where actual is more, in that situation, you will apply based on the actual. That is 5 lakh by 1 lakh 20,000, which is equal to 4.17 per unit. So hope you have all understood. This is the allocation. Now, let me go to another question. Right. So there are some costs. Now we need to consider whether these costs are to be considered or not. First one, trade discounts on purchase. Will we consider this? Yes, we'll consider, but as a reduction. Hello. Will we consider this? Yes, we'll consider, but as a reduction. Handling costs related to imports? Yes. Salaries of accounting department, it becomes general administration overheads, hence we will not consider. Then sales commission paid to sales agents. This also is a selling expense to be reduced from sales, not here. So after sales warranty cost, that also will not consider because not necessary for getting it ready for sale. Import duties, it's a non-refundable tax, will be considered. Cost of purchase, the basic purchase price will be always considered. Freight expense, transportation charges will be considered. Now when they say insurance of purchases, now always remember insurance, just wait. Always insurance, two types may be possible. Now make it very clear. When they say insurance, two types may be possible. One, that insurance that during the transportation. What is that? During the transportation. Now when you are purchasing any raw material or any other material to bring it to the location in the transportation, you may do some insurance. Now this is required. This is required for getting it to the location. Now this can be considered. Now, after coming to the location, if you insure once again the general insurance, maybe fire, due to fire or any other things, then this need not be considered. Once it has arrived to the location, then if you do some insurance, that is not any direct expense, then that should not be considered. Now, this insurance, they are related, it is related to purchases only, so that we can consider. Make it very clear. If the insurance is at the time of purchases, transportation insurance, then that can be considered. But later on, any general overheads, that may not be considered. The next one, something is given, brokerage commission paid to indenting. Sir, brokerage, will we consider this? any brokerage commission will be considered. Now once again, the point is same. Whenever I say brokerage, it can be of two types. What are the two types, sir? Now understand, both for purchase and sale. For sale you require brokerage. For purchase also you require brokerage. Am I right or not? For purchase brokerage will be there. Similarly, sale brokerage also will be there. Am I right or not? Yes, yes, yes. Now understand, if it is brokerage at the time of sale, is it required for getting it ready for sale? No. Hence it need not be considered. No, sir. It is the brokerage with respect to purchases. Then it is directly related to your purchase only. In such a case, it can be considered. So here it is given indenting agents. Indenting the inwards, it is nothing but purchase agents. So thereby you can consider this. This is also considered. So hope everybody is able to understand. So these are all the costs to be considered and not considered. Now let me move to the next question.
Hi students, I am Prakash, Academic Advisor, Masterminds. Just now you have watched a sample video of our rapid revision batches for CA Inter level. So we are very happy to say that we have developed this kind of rapid revision batches for all the subjects of CA Inter and IPCC level. And if you are interested, then you can directly purchase rapid revision batch videos of your choice from our app. So first of all, you please do install our Android app Masterminds Online Classes from Google Play Store. So after that, click the option Store. After that, select the filter CA Inter RRB. CA Inter RRB. Yeah, here it is CA Inter RRB. So whatever the subject you want, you can purchase the same. And for each video, there will be around 6 months of validity. That means whenever you purchase a course, there will be 6 months of validity. That means you can watch at any time before 6 months after the date of purchase. And we will be giving 1.5 views. That means each 1 hour of video you can watch for around 1.5 hours. And these videos can be watched directly in your mobile phone. And if you belong to iOS platform, then please do install an app called Class Plus and enter the organization code as MZGUN. I hope that you liked the sample video of RRB subject being uploaded by us, and please do subscribe this channel so that you can receive a notification whenever we add a new video, and also press the like button if you really like this video, and also press the bell icon so that you will receive a notification. And please do send a mail to my mail ID if at all you have any academic doubts or issues. My mail ID is mssprakash2012@gmail.com. So once you visit our app, not only RRB videos, you can find large number of other videos also. If you belong to CA Inter, then so in the filter section you can select the option CA Inter. Then all the videos related to CA Inter will be visible to you. So just now I have pressed the option of CA Inter. Now all these are the videos available for CA Inter. For example, if you want to watch the videos of a particular subject at CA Inter level, or a particular chapter at CA Inter level, either of regular batch or crash batch, all such videos are already available in the app. So the videos related to CA Inter regular batches, videos related to CA Inter crash batches are already available in this app. Either you can purchase a particular subject, or sometimes even some few chapters, or even the entire group you can purchase directly from the app. That is the convenience with which you can watch the videos by installing our app. All the best. Let's have a glimpse into the roots of the masterminds. So Masterminds was established in 2002 and is undeniably the pioneer and the leader in MEC, CA and CMA coaching in India with a lion's share of nearly 20,000 admissions per annum. It is an incredible initiative by three visionary edupreneurs. That is me, MSS Prakash, Chartered Accountant, my brother Mohan, my sister-in-law Radha. From the same family at a very young age under the successful mentorship of our father, Mr. M. Sivaprasad. Within the shortest span, our presence have expanded to almost all major cities of AP and Telangana. We are humbled to say that very soon we want to expand to the states of Karnataka and Tamil Nadu also. So especially with the wishes and support of all our old students. We offer best quality services for MEC with integrated coaching for CRCMA Foundation. Exclusive MEC CEC coaching is also available. Regular class, study hours and revision exams, MMTS services for all the levels of CSCMA courses. And recently we launched a unique academic program called MEC Pro, aiming the students who aspire to pursue BBA, CLAT or MBA in future rather than CSCMA courses, and we have received excellent response. So our students have achieved first rank for 47 times in various courses that we offer coaching. Till now, our students have bagged 977 All India ranks in all the stages of CSCMA courses. So 98 All India ranks in a single attempt of CMA inter and final exams. And 180 All India ranks in CSCMA courses in 2019 and 20 alone. So 3 All India first ranks in the year 2020 alone. So right now we have around 150 batches of various courses in Guntur and all our branches together.